welcome to Business Morning right here on Channels Television, where we bring you the markets straight to your screen, the economy into sharp focus. Markets are open after the break yesterday as Nigerians bid farewell to former President Muhammadu Buhari. But let's get to the top stories as set to agenda as markets open right here in Lagos, Nigeria. Starting with oil prices, they were seeing a boost for oil prices this morning, but still below $70 per barrel. There, that's for Brent. Just smack on at $69.01, 0.44% up. And we see the U.S. grade there, WTI, that's $66.92 a barrel, up 0.63%. In a tight range, we're seeing signs of steady demand from an increase in travel. That's during the northern movement there, right in the U.S. for the Northern Hemisphere summer. That's competing with concerns that U.S. tariffs on trading partners will slow economic growth and fuel consumption, and we're seeing the impact there on the prices of oil. Definitely keeping an eye to see what plays out later on in the day. All right, to other stories now. We see Nigeria has once again surpassed its Organization of Petroleum Exporting Countries crude output quota, marking the second time this year the country has exceeded its 1.5 million barrels per day limit, first in January and now in June. Data from the Nigerian Upstream Petroleum Regulatory Commission shows average daily crude output for June that reached about 1.505 million barrels per day, up about 100% of its allowable OPEC production. When condensate is included, total liquid production for the month averaged approximately 1.7 million barrels per day, with daily lows and highs ranging between 1.61 and 1.82 million barrels per day. This marks a notable month-on-month increase from May, when crude output stood at around 1.45 million barrels per day, total liquids, and 1.65 million barrels per day. However, despite this uptick, both crude and total outputs remain below the 2.06 million barrels per day production benchmark set in the 2025 national budget. And to the subnationals now. Lagos State has emerged as the clear frontrunner in the 2025 edition of Phillips Consulting Limited State Performance Index, reaffirming its position as Nigeria's economic powerhouse and a benchmark for governance and public service delivery. The newly released data-driven outcome-focused report places Lagos at the top among Nigeria's 36 states, and the Federal Capital Territory particularly excelling in internally generated revenue thanks to its thriving ports, vibrant private sector, and dynamic infrastructure. The PSPI's evolution from perception-based assessments to hard metrics underscores a maturing framework for state-level accountability, according to Victor, head of international development at Phillips Consulting Lagos, says it's provided a functional platform for private sector growth, enabling it to sustain momentum in revenue generation and service delivery. And on to social media now. TikTok has taken decisive action in the first quarter of 2025, removing over 3.6 million videos uploaded by Nigerian users, marking a 50% increase from the previous quarter for violating its community guidelines. According to its Q1 2025 Community Guidelines Enforcement Report, the platform's proactive detection systems flagged removed 98.4% of offending content before user reports were received, with 92.1% of removals executed within 24 hours. At the same time, TikTok strengthened enforcement on live content in Nigeria, banning 42,196 live rooms and interrupting 48,000 streams for guideline violations. And definitely, I know that might be a hard pill to swallow for some, content creators right there on TikTok. But go check your videos out, at this point. All right, so now to the statistics part of things. Now we see the Statistician General, Prince Adeyemi Adeniran's coming to scrutiny over the drop in Nigeria's unemployment rate. Defending the figures, Prince Adeniran emphasized the drop was primarily driven by an updated methodology aligned with international labor organization standards, most notably the recalibration of employment threshold and broader survey criteria. He made the comments earlier, that was yesterday at a media parley. All right, we'll take a break now. When we come back, we're going to be unpacking a lot today, starting with the capital markets and what's happening, that's for in the macro side of things. How's that impacting credit ratings, and also Lagos real estate. That's next. Do stay with us. A critical discussion on the intricate relationship between capital markets and the prevailing macroeconomic headwinds now, particularly with the Nigerian context. We'll delve into how economic forces are shaping investment landscapes and influencing strategic decisions. We'll also explore the resilience of key players, the dynamics of investors' sentiments towards sovereign risk, and profound impact of monetary policy on market returns. I know next week is decision day. Right here in Nigeria. Joining me now to unpack this, we have Mr. Yemi Ejao, who's Executive Director of Investment and Group Chief Investment Officer at Odua Investment Company Limited. It's great to have you, sir.
Thank you. I'm glad to be here as well.
Yeah, so I see most of what you do, you know, investment, you know, at this point, and I know you wear many hats, you know, from the oil and gas industry and also to
my background,
exactly, to locating the right investments, you know, at this point. And I guess congratulations are in order right now. Your latest rating there by Gusto, I went from A+ to AA-. Talk to me about that.
Interesting. That's the third time in a row that we've gotten an increased rating. So we're excited about that. It sort of shows the resilience of the business. If you know the history of Odua, started in the 70s to warehouse the assets of the then Western region. Some of those assets are even older than Nigeria. The investment in Lafarge was done in the 50s. The investment in Nigeria was done in the 50s. And those are still assets and investments we still own in the portfolio today. But then, along the way, in the 90s and to early 2000s, maybe, Nigeria happened to so many businesses, macroeconomic issues, maybe poor management. But luckily, over the past, I would say, for 14 years, the owner states have been more intentional about the way they follow up on Odua. And so the increased rating that we've just witnessed is a result of every little step that has been made or that has been taken over the past, I would say, 12 years.
Right, and how difficult is it to, you know, maintain these ratings or actually be, you know, upgraded? And what does it mean, really? Does it mean, oh, you guys are able to go and, you know, you're credit worthy?
Oh, yes.
You know, at this point, anybody can give you money.
So, to answer the first part of your question,
right.
How difficult it is, it's not, I wouldn't say it's difficult. We know what, if you do the right thing, your cash flow is good and it's increasing. The rating agencies know what they're looking for. And we happen to have done the right thing. We happen to have done the things that are expected of a business, irrespective of whether we're looking for ratings or not. Now, the last part of your question, does that mean we're credit worthy? Oh, yes, that means we are credit worthy. And I think at some point, we will definitely tap the market to say, okay, we have this kind of rating. Maybe we might just come to the market and look at using something like commercial paper, which a lot of businesses in Nigeria do today.
Right. So what does this signal, you know, right now about, you know, Nigeria's economy, you know, in 2025?
Well, I wouldn't say the rating signals anything about the Nigerian economy.
Right.
Yeah. But as you know, we've gone through a difficult period as a nation, macro-wise, over the past few years. But then with the reforms of the new government, there seems to be a lot of optimism, especially in the investor market. Everybody's thinking, well, things are looking good. But then that has not translated to anything positive on the street. So the common man has not really felt anything. Things are still very tough. If you look at the stock market, the optimism is there. And of course, the stock market looks forward. It doesn't look at exactly what's happening today. They're looking at, oh, we think it's going to look good. So if you also look at the NPR and the way it has behaved over the past, since the beginning of the year, at the early part of this year was like 29%, about 29%.
Right, so we've maintained that tight stance, you know,
but with
trying to bring down inflation.
With the rebasing of the inflation, which we did about that time, today, the last auction of the T-bills that were done, the yield was around 20, low 20s. So really, that could signal that inflation is being fought and by CBN. If that signals anything, it means that the borrowing rates for businesses should go down over the next year or two. Maybe that would be the time for a group like Odua to say, you know what, let's test the market and see this our rating. and we'll make use of it.
Right, and talking about the macro side of things now, definitely next week I believe we should have the decision day. That's for the MPC that we're meeting to tell us what's going to happen next with borrowing costs. And we see, in the U.S., President Trump is asking for rate cuts. They're pressuring the U.S. Fed, but we're not seeing that much pressure here. Although from private sector side, they're saying that the MPC should cut rates, should start cutting rates now. What do you think? Is that the right path?
So the private sector that is pushing for the CBN to cut rates is simply because there's a belief that inflation is no longer as problematic as we thought it was going to be. The jury is still out on that, because remember, the rebasing that was carried out in December or thereabout could be, some people see it as financial engineering. Some see that what wasn't required. So until we actually feel the impact that, personally, until we actually feel the impact that the inflation has actually subsided, I would say that's when the MPC will cut it. But then the M of Affairs, they take the decision. Next week, we'll know.
Right, and talking about the rebasing, the inflation data and all of that, definitely even at these levels, inflation is still very high.
Still very high. At this point. If I remember correctly, back in, I would say 10, 15 years ago, the target had always been around 12, 10%. Today we are, what, 20-something%. So low 20s, still very high.
Right. I know you're a very big investor at this point, and definitely you have your eyes on the streets at this point. Talk to me about where big investors are seeing confidence in the Nigerian economy.
In the Nigerian economy, a lot of people are pushing the agri sector, especially in the value add. From food, provision of food on the table, food security as well for the country. There's also a lot of push in the health sector. As you can imagine, there's a huge number of money that we spend outside the country to treat ourselves for the critical illness. But then there have been a lot of, a few hospital-type healthcare platforms that have sprung up over the past few years. In fact, Odua made an investment in one early this year, and we are excited about the opportunity because of our government leaning or relationship with government or region, I would say. We just didn't make that investment to make money. We made that investment with the intention and the hope that at some point we'll be able to spread healthcare, affordable healthcare around the region of our stakeholders. So I would say in terms of investment, a lot of people are looking at agri, they're looking at healthcare. At Odua, we're also looking at the infrastructure side that could support agri and trade. We're trying to revive a few of our old businesses that have assets that are strategically located in different parts of Nigeria, and we're working on that. Hopefully, in a couple of months, some of this will come to fruition. And of course, hospitality. You can never say we have enough good hotel rooms in Nigeria. So Lagos Airport Hotel that we own, we're looking at the development of that as well. We started the process, I would say, elaborate process that we started. We've hired financial advisors, and so that should take us a few months of development planning before we get to groundbreaking.
Right, and I'm going to be discussing real estate a lot, today. Okay. Talk to me about the region, so far. How are you seeing the real estate industry, when you look at demand, supply in this, region that you cover? What are you seeing so far? What are the trends?
So it's interesting that in the same region, you can have a very wide perspective of real estate. In Lagos, what you see in Lagos is not what you see in Osun State, say Ede or something. For us at Odua, we have a subsidiary, 100% subsidiary that focuses on real estate, Wemabod, and we're doing a lot in the Lekki axis in Ikoyi. I don't know if you've been following the news. Just last week or 2 weeks ago, we broke ground on a project at Lugard. And today, I will be breaking ground on the redevelopment of Awolowo Glass House at Ikeja. In fact, I'm headed there from here as part of our real estate program. We're looking at residential, and we're looking a lot at the industrial, warehousing. One of the better performing assets that we have in real estate are the warehouses that we have, because there's been a lot of demand for those, and we are all trying to capitalize on actually taking a bit of the industry, that market that is not well served, the grade A modern warehouses that the international companies require for their own business. So,
right. I guess demand for warehousing, that's a good sign. Sure. That means production is happening.
Yeah, it also could mean so many things. The economy has changed. 35 years ago, I think, in Nestle, we built something at the interchange and include warehousing. Right? Lever Brothers and all of them, they take hectares of land and build and start manufacturing. Today, a lot of Chinese and Indian manufacturers, smaller scale manufacturers, are all littered around on that Lagos, Ibadan, Shagamu axis. And they don't necessarily have their own warehousing facilities. And remember, even they might be in Shagamu. Most of them are targeting the Lagos population. So definitely they would need to move their goods and have a central distribution centers in maybe Ikeja, maybe somewhere that will serve the Lagos population.
All right. Yeah. Well, I guess, a lot to unpack there and a lot to look out for.
Sure.
We're done with the first half of 2025. We're in the second half now. I'm sure we will have your eyes set on various investments. But thank you so much for helping us unpack all of this today. I've been speaking to Mr. Yemi Ajao, Executive Director, Investments and Group Chief Investment Officer at Odua Investment Company Limited. Thank you for coming on today.
Pleasure. Thank you.
All right, we'll take the conversation further now. We'll see a report titled State of Lagos Housing Markets there, produced by Roland Igbinoba Real Foundation there. That's showed quite a lot about what's happening with Lagos real estate there, showing that the housing deficit has surged by 15% from around 2.95 million units in 2016 to roughly 3.4 million units today, emphasizing the growing gap in supply despite both public and private interventions there. So we see that drop there, about or addition there, the growth, that's for the deficit, big 15% move there from 2016 to 2025. Well, joining us to unpack this report now, we have Dr. Roland Igbinoba as the President, PropTech Nigeria, and Executive Vice Chair, Roland Igbinoba Real Foundation for Housing and Urban Development, joining from Abuja studio. Great to have you. Good morning.
Morning, Laddie. How are you doing today?
I'm doing fine. And definitely, I know some people watching us right now might be property searching. Right now, we know how grueling that can be when you don't have a very big budget. And your report is showing that the deficit there has grown by 15% in Lagos. Talk to us about this.
Okay, thank you very much. This has been some time where we have tracked house prices via the Roland Igbinoba house price indices. And what has happened over the last 10 years is that you've seen, just like you mentioned, you've seen the deficit grow from 2.95 to 3.4 million today. And there are several factors why this has happened. A typical example, I'll tell you today, we found out from the report that home ownership in Lagos City is at 23% today, okay? In 2016, that figure was 15%, so there's an increase in home ownership, if you look at it from the home ownership perspective. But what is interesting is that 40% of the homes are owned by investors, okay? So you see investment in luxury areas, and so that's making the deficit grow. Now, another interesting thing is that Lagos receives about 600, or in excess of 600,000 people coming into Lagos. And what that does is that even though there are new homes being built, because of the influx of people coming into Lagos, you see this deficit growing. Another thing that is also responsible for this deficit is the speed to market. So, for example, if you look at the time that it takes to process housing permits, okay, it means that there is cost, And also, the time it takes developers to come to market then also takes a long time. And so that's been what's been responsible in terms of the deficit. I mean, there are issues that we already know. There are issues of building materials. There are issues of infrastructure. But the key points that I would say here is that a lot of the investment in housing are made by investors. And that kind of increases that deficit in that space. Ladi.
About supply increasing, but deficit is also rising. How much of the new housing is luxury versus affordable?
Okay, so that's a very interesting question, because what you find is that while a lot of developments are happening in the luxury segment, you find out that in the low income segment there is undersupply. Okay, because people are focusing on where they will get people to buy and where they will get investors. And again, there are also several reasons for all of this. You know that, I mean, with the current state of the naira, it means that diaspora remittances can play a lot of factor in this, where you find that there are a lot of investments going towards premium areas, not necessarily luxury, but going towards premium areas than the affordable housing play. And this can really become a problem. And that's why you see sort of there are new builds coming up, but the deficit still tends to be on the rise. Ladi.
Right, and how much of this is due to population pressure there? Because definitely as population increases, there's more demand, for housing units. How's the gap there between population rise and the supply of units?
I mean, urbanization is always a challenge, if you know what I mean. So again, the example that we gave, okay, if you look at the influx of people coming into Lagos, for example, and you can count that as the population. At the time we did the report in 2016, Lagos was, I think it was around maybe 17, 18 million at that time. And today, Lagos is 24 million. So that tells you why you also find that kind of deficit, because I'll tell you something that's very interesting that we found in the report. Now, when you talk about affordable housing, you are looking at how affordable is it for people to own their homes. Now, in Lagos, less than 5%, okay, of houses are priced under 15 million. So that just tells you the enormity of the challenge that we are facing. And if you have that, it means that looking at earnings where you have a lot of people earning between 100 to 200,000 naira, if you do the math, it then becomes very difficult, especially in a market where the mortgage reforms are just evolving. So it becomes very difficult for people to own their own homes.
And also, we've seen that Airbnb-style investments there. That seems to be, gaining a lot of ground now. And, on the back of the dirty December, we know most of those apartments were in high demand. So, looking at, investment now, how do the luxury shortlets, how does that affect, housing availability?
So very, very interesting. So here now you're talking about residency and talking about how people are doing investment, right? And that's also a reason for housing deficit. Now, if you look at, I mean, like you rightly mentioned, dirty December, people are already now planning even investment in the dirty December in terms of shortlet. And what typically happens, like I mentioned earlier, 40% of these homes that are built are by investors. So what happens is you find out that people are investing because the yields, okay, in shortlets and Airbnb types are higher. So in Lagos, for example, if you look at the luxury areas in Ikoyi, Banana Island, yields are around somewhere around, very good is around 6.5%, 6%, anyway, between 6 to 7.5%, right? But when it comes to shortlet, you could command yields as high as between 15 to 18%. And capital flows where it is best, where it will return best for investors. And so if rather than investing in a long-term rental property that yields an average of around 6.5%, why won't I do a shortlet where I know that I can get between 15 to 80%? And so that's what you're seeing in the market in terms of the shortlet space. And a lot of the premium areas, this is happening. And again, this is another factor for the deficit that Lagos is experiencing today in terms of rental stock and home ownership.
Right. So, with the report so far, it seems, the investors are there in the market, for the money. Government is not able to, provide the, affordable housing, that most people need at this point. So, who's going to save us?
No. I mean, you must understand that, like I said, government, there are a lot of activities happening within the government space, okay? And that is where regulation comes in. And when you talk about regulation are on both sides. So, for example, government is helping with digitalizing land. There are a lot of work going on at the EGIS. And once all of that crystallizes, what it means is that costs will drop. Now, government is also doing a cross-subsidy mechanism where they're saying to developers, so if we give you a parcel of land, you should be able to build 10 to 20% of that land for affordable housing. Okay, but again, you cannot, investors will put money where they can't earn their yield or return. But in terms of government, I think all of the work in terms of the infrastructure that helps developers is happening. It just haven't come to fore yet, and that's what's happening within the space. And in terms of regulation is a very interesting thing. You would have noticed recently the Lagos State Real Estate Regulatory Authority came out very strong-willed in terms of regulating all of the agency practices in the state. And beyond that, what's also happening is that by the time there is transparency in the sector, and that's what regulation is bringing to the state, by the time there is transparency and transactions are in the fore of the government, then I think all of these issues around people just focusing on the luxury end or just focusing on the short-let sector would then abate a bit, and then that can help in terms of affordable housing. And you know that, Ladi, if you look at housing, right, housing is the most expensive asset, as they say, that an individual may have in their lifetime. And what happens is you also need to look at the earnings. If you look at the income demographics, okay, it's just almost impossible. So, for example, you can't do affordable housing without affordable land. And if you look at Lagos, for example, tell me, where would you find affordable land in Lagos? And so it's a mix of several variables that need to happen to be able to come to a place where you can have affordable housing in Lagos. And that's why the mechanism of the cross-subsidy that the state is engaging in is helping. But again, that's not, it is not closing the deficit gap. And that's why we have had a 15% increase between 2016 till date.
Because it seems that, at this point, to get a good area, good property for around 1 million naira seems impossible, at this point. That was,
what do you mean, Laddie? 1 million naira for?
That's for rent,
1 million naira for rent?
Yeah, for rent. You could rent an apartment, a nice apartment, not so long ago, for about 1 million, and that was supposed to be some, like, high-end. But now you have to cough out like 6 million naira, to get a good property. So you've mentioned affordability, how can you get affordable rates when the land is not affordable? So what other funding alternatives are there, at this point? I hear there's crowdfunding. How does all of that work?
Oh, okay. Interestingly, yeah, crowdfunding is a very innovative alternative financing mechanism. I'm also, as you know, I'm also vested in a crowdfunding platform called PropCrowdy. And basically what this does is it helps to pool money together. And the good thing with that is SEC licensed crowdfunding business, and so there's regulation for crowdfunding now. And so what we've seen in the space, working with crowdfunding, especially at PropCrowdy, is to see that people are now looking for outlets to put their money. And so that's helping also developers construction, where developers are now able to pool money together to do development in small bites anyway. This hasn't gotten to a large scale, but as you know, every sector, every market would evolve, just like we have seen in the non-interest non-interest finance, that has now evolved and I would say emerging in Nigeria. And so crowdfunding is on that path. The good thing with crowdfunding, though, is that it not only funds developer and helps reduce that cost for development, it also opens up investment opportunities for people who would not be able to do investment ordinarily. So, for example, with a 50,000 naira, with 20,000 naira, you can get on the investment ladder with crowdfunding. And so we're seeing that space. We're seeing a lot of actors coming into that space. Today, we have about 5 licensed crowdfunding platforms in Nigeria. And so we think it's something that's going to help within the real estate market. Because if you look at other climes, okay, crowdfunding is a top alternative investment finance and funding mechanism.
All right, definitely I'll be looking out for your next report. Hopefully that gap there, that deficit will close more so that Nigerians can get affordable housing and, we can have more landlords, at this point. Thank you so much. Dr. Roland Igbinoba is the founder, Prop Crowdy Limited, and Executive Vice Chair, Roland Igbinoba Real Foundation for Housing and Urban Development. Thank you for coming on today.
Thanks for having me, Ladi. Yeah, thank you.
All right, we'll take a break. When we come back, they'll find out how MSMEs can get more funding. At this point, that's our next conversation. Do stay with us. And now to our next conversation. Nigeria faces a staggering 24 trillion naira SME credit gap. Only about 37 trillion naira is dispersed out of the 64 trillion naira needed annually, leaving countless small businesses without crucial financing support. Now we have fintech innovators using AI-driven credit scoring powered by alternative data, e-commerce histories, mobile money flows, utility payments to assess credit worthiness for thin file SMEs. Joining us to unpack this, we have Oluwatoyin Laoye, is a Chief Risk Officer, Vendor Credit. Great to have you on the show.
Good morning. Great to be here again.
Yeah, good morning. So, I like to talk to chief risk officers because sometimes I like to get into your head. I know you love to identify risk. You look here, you say, okay, this is risky. You look this way, this is risky. Don't put your money in there. How's the risk looking for you so far?
So far, it's been a bit of good news and bad news, right? So obviously, interest rates play a big role in how we make lending decisions. So with increased interest rates, right, you need to adjust for a lot of things, right? Borrowers' appetite, cash flows and all of that. On the good side, we also see that there's been an uptick in the level of business that we've seen in the marketplace. So on the good side, where you have some form of demand, on the other side, you have restraints, right, with access to liquidity because of the current interest rates environment, that high interest rate environment that we currently experience in Nigeria.
So, definitely, I guess it's not the easiest thing, providing need for near instant, lending decisions. Break it down for me. What do you have to put together to make this kind of, decisions to actually say, okay, this person is actually credit worthy at this point? How much information do you need?
Okay, so previously, your traditional finance institutions will look at things like audited financials. They will look at, collateral, right? All of that is not available to SMEs. So what we've done is taken an alternative approach where we're looking at bank account statements, right? Bank account statements tell a story. If a small business or a business has been operating for a while, you can see inflows from their customers, right? You're also looking at fulfillment records, right? Who have they done business with? How long have they done business with that person? Utility payments, mobile money activity, right? All of that shows you a track record. And off the back of that, you can build models that are flexible, that guide your lending decisions. So unlike traditional institutions who are sort of I don't want to say inflexible, but who are sort of strict on certain criteria that they use to make lending decisions. For us, we try to utilize a whole gamut of alternative data that a lot of people would ordinarily not take into consideration, right? And then combine all of that to create a credit profile for the person. And off the back of that, we can then make a lending decision to the person.
Sometimes you imagine, because AI is doing a lot of crazy things right now, and you wonder if some people can actually trick AI into showing their history when it comes to e-commerce, utility, mobile money, and all of that. How do you identify to make sure that that data, the integrity of that data, how do you confirm that?
Okay, so data integrity is a big deal for fintechs. I don't know any fintech that will not tell you that the first thing that they did was data integrity. And AI doesn't work in isolation, right? So AI, a lot of the things that you're seeing nowadays, machine learning tools, OCR, decision engines, they are tools that have been fed data from verifiable sources, right? So you need to have at least 5 years of data. So when we started out, we didn't have AI as our first, credit model tool. We built a credit model based on our understanding of the market. And then you then need to start categorizing that data, analyzing that data, and you need like at least 5 years worth of data to then feed any of these AI tools, right? There are so many of them. You have some in the open source, you have some that are hosted by the cloud, and then you have some that are just commercial SaaS platforms, forgive me, right? But all of this is based on verifiable data. So some of the things as you mentioned now, if you've dealt with a client for the last 5 years, you would have a track record. You would have some form of information that you can then say, oh, I've verified this customer. I have his email address. I have his utility bill. I know where he pays his bills at. I know his repayment cycle. I know who his largest customers are. You can treat that into a tool, and then that tool then assigns weights, and off the back of that weight, you can then make a lending decision. So AI is not in itself, does not work in isolation. It depends on the data that is fed to it, and that data is what we've gathered from a lot of our customers over time, and then cleaned up the data to ensure that data integrity is topmost of our list.
Right, and you don't have to answer this question. Do you think AI will think Ladi Williams is credit worthy? You don't have to answer that.
Okay, I'll plead the fifth on that then.
So what fairness metrics, and audit frameworks do you have in place to detect and mitigate bias, when it comes to AI credit scores?
So like I said, right, AI in itself does not work in isolation, right? So we do what we call a bias detection, right? This sort of checks your model for disproportionate rejection rates across different segments. Like we know in Nigeria, and I'll give Nigeria, and I'll use Nigeria as obviously as our example, right? We understand there is general knowledge with verifiable data that women-led businesses do not get as much funding as they need, right? So in our situation, right, we've carved out a portion of our portfolios for lending to women-led businesses. And what you do is that once you have a bias detection tool in place on your model, it sort of checks for rejection rates across this segment. So gender, geography, sector, things like that, right? That would ensure that whatever we're doing, right, is fair. The transparency of also the algorithm we use, right? A lot of our scoring decisions can be interpreted, right? Based on assigned weights. There are policy manuals to guide all of this. So a lot actually goes into ensuring that there is no bias in your AI tools as a company, right? And then there is constant revalidation. So you bring in an independent auditor to look at also your model and your tools, right, that you're using for analysis to ensure that everything is in line with globally acceptable standards. So there's a lot of work that is done at the back end that a lot of people don't see to ensure that there is no bias when it comes to lending decisions as a whole.
And, you know, there's that sentiment that, you know, most of the time the big businesses and, you know, government somehow crowd out, you know, the smaller players, you know, when it comes to, you know, getting credit. You know, in your view so far, are you seeing any improvement, you know, with the traditional financial institutions actually, you know, giving more to the small businesses? Are you seeing any improvement there?
So what we've seen over the last couple of years has been support from DFIs, Development Bank of Nigeria, BOI, Afrexim, AFC, right? There has been a lot of focus on those areas that have generally not been included. And so they've also carved out pools of liquidity where lenders can tap into. BOI has a fund that is focused on inclusion, same thing with Development Bank. Who we are hoping to do some very good work with in the next couple of months, right? And so basically because of that, we've seen a renewed thrust into providing liquidity to areas which are hitherto have been excluded from your mainstream financial, from lending basically. So women, SMEs, farmers, agriculture as a whole, right? There's been assigned pools of liquidity that has been given to those. So you see traditional lenders who are also taking advantage of that, and then smaller players who are a lot more flexible and understand the needs of these players and can provide a lot more financing in those areas, basically.
All right, with some of the AI tools that you mentioned, is it getting easier to identify risk?
I would say to some level, yes, right? And why I took a pause was because, like I previously said, AI doesn't work in isolation. So it depends on the data that you give to it, right? And so you need to have a requisite number or appreciable data to be able to, you know, quantify risk appropriately. Take your typical vendor, right, whose counterpart is maybe just one multinational, so he runs a concentration risk there. So if anything happens on that forefront, right, or his operations are not vital to the company, maybe he's not providing a strategic tool that the company needs to increase revenues in the year, right, you find that there's a mismatch in terms of repayments and his ability to repay. And so you need to take all of that into context, right, and then decide and make a lending decision based on these variables that you see in the marketplace. So AI in itself, like I say, it's easy to throw it around because it's become the new buzzword. Oh, machine learning language, AI tools. We have different variants, you know, and every big player in the market is, you know, amping up to supply the next big AI tool. But in itself, it cannot work in isolation. It still needs verifiable data and understanding and context, right? And then that drives the lending decision. So in itself, right, you do see a way where AI can help quantify risk, but there is always a human angle that needs to be involved.
Right. All right, we'll keep tracking this, and hopefully the MSMEs and small businesses, you know, get more attention, you know, when it comes to funding. Thank you so much for helping us unpack this. Oluwatoyin Olaoye is the Chief Risk Officer at Vendor Credits. Thank you for coming on today.
Thank you, Ladi. Thank you for having me.
All right, let's get a check on what's playing out in the global space now. And we have Ini John McQuarrie with those details. Ini, I don't know if you're as afraid as I am of artificial intelligence. You know, they've used our images on social media to try and scam people, making it sound just like us.
Yes, I know, Ladi. It was really scary when I saw that one. I don't know whatever they said I was selling.
Yeah, you're selling so many things that you don't even know.
That I don't even know. So I think, like your guest said, it's the mind of the people. It's a human being who took that image and put the voice and manipulated it, you understand, to deceive people. So, I mean, I know AI has made a job so easy. You know how long it used to take you to do a research if you're going to work on a documentary and all of that. You can go to Google now and get a summary of, you know, everything that has been put on the internet about Nigeria's budget, for instance. So, you know, I'm not afraid of AI. I think we should deal with the people. It's the mind.
Right.
It's still back there to the people.
So you heard it here. Whatever you see me and Ini selling on Facebook,
it's
any investment package, that's not us.
Yeah, we're not salespersons. We're journalists.
Exactly.
And we're business journalists. So we come here and give you updates on what's going on in the world of business. But we do not go to any social media to sell any products, any medicine, whatever.
Right.
no assets or anything that we sell.
We're
just
not selling anything.
Yes, just to give you the information. Anyway, it's good to be back. Good morning, everyone. And yes, let's do a bit of a global roundup on what's going on there. We start from the United Kingdom, where inflation rate hit a hotter than expected 3.6% in June. That's according to data released by the Office for National Statistics. Economists had expected inflation at 3.4% in the 12 months to June, after it hit 3.4% in May. June core inflation, which excludes more volatile energy, food, alcohol, and tobacco prices, rose by an annual 3.7%, and that's up from 3.5% in the 12 months to May. The British pound rose almost 0.2% against the dollar to 1.34 following the data released. UK Finance Minister Richard Reeves says that the data showed that working people are still struggling with the cost of living, and said that the government had more work to do to help ease the pressure on consumers. Inflation data will be closely watched by the Bank of England as it tries to determine the trajectory for interest rate amid a stubbornly high inflation rate and lackluster economic growth. In an inflationary environment, central banks usually opt to maintain a higher key interest rate to encourage more saving and less spending in order to slow down price increases. I have to add that the numbers also came out from the U.S. yesterday, and it was higher than expected. I think that will make Jerome Powell happy, because he shouldn't be under pressure to cut rates if President Donald Trump would follow the norm, that is to say. Well, still in the UK, the Financial Conduct Authority said it has fined Barclays £42 million for poor handling of financial crime risks. Now, this is another trouble for Barclays. It's not the first one, it's not the second one. The regulatory action comes as Barclays Bank UK PLC agreed to make a voluntary payment to clients of WealthTech who were affected by shortfalls in their ability to reclaim funds. The voluntary payment amounts to £6.3 million and will be distributed to WealthTech's clients who experience gaps in money that they have been able to recover. Let's move to U.S. now. American chip-making giant NVIDIA says that it plans to resume sales to China of an artificial intelligence chip that's become part of a global race pitting the world's biggest economies against each other. That's the U.S. and China. Well, the company's announcement comes after NVIDIA CEO Jensen Huang met with President Donald Trump at the White House last week, and Huang has argued that restricting sales of American technology to China could put the U.S. position as a global leader at risk. And the company had said that the restrictions were causing it to miss out on billions of dollars in lost revenue. And I guess that's what President Trump intended, to get the attention of the big company. And away from that, central banks are increasingly looking to bolster their gold reserves, and they're turning to mines in their backyard to source for the yellow metal. Besides being cheaper, securing gold directly from mines helps support local industry and bolsters reserves without weighing on foreign exchange reserves. And while countries such as the Philippines and Ecuador have been doing this for years, more central banks with access to domestic gold mines have started and increased or are considering direct local purchases to the World Gold Council. We know that Ghana in West Africa is also very big on this. And Huawei Technologies took the top spot in China's smartphone market for the first time in more than 4 years. That's a comeback fueled by new designs and software that appeal to users in a slowing market. The hardware giant held on to a roughly 18% share of the market in June quarter, while other leading competitors like Vivo and Oppo slumped, according to IDC data. And then closer to home now, the Mayor of London is in Lagos, Nigeria, and he came with a 26-man delegation. They've been meeting with businesses, discussing on how they can increase the frontier between both countries. And Ladi discussed AI earlier. Well, AI is top on the mind of those delegates and top on the list of the conversation they've been having.
All right, so I guess, you know, at this point, we'll try and get those tracks later on, but a lot playing out right there in the global space. Everyone's stacking gold again.
Yes, I mean, it seems to be the new reserve. I wonder when out here Nigeria started stacking gold.
To find out.
And we do have gold too. Yeah. And now they're talking about actually doing it with domestic miners. So you don't have to wait for it to be imported or refined from outside your country. You can actually get yours, you know, connected to the World Gold Council, and then, you know, you can connect it to your reserve.
You know, for some of those workers, you know, definitely.
And we've seen the Ghana CD performed, I think last month. It was the best performing globally.
Right.
Globally, because of gold.
On the back of that massive gold rally.
Yeah. Yeah. So, I mean, it's something.
And we have gold too.
We have gold, but what are we doing with it?
Find out. Thanks so much, Ini, there for the details. We'll give you more updates later on Business Incorporated. We know the markets are open right now. We'll bring you up to speed on who's making money and who's not at that time. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ's. Bye for now.